Hello, this is Todd Hubbs, agricultural economist at the University of Illinois. Today I'm talking about my weekly outlook for September 10th, 2018, soy exports since the onset of tariffs. Today I'm looking at how trade flows have sort of changed since we've seen retaliatory tariffs between the U.S. and China, and what the Chinese tariff means for soybean exports from the U.S. There are two key things I think we need to pay attention to as we move through 2018-19 marketing year. One is the spread between our main competitors' price at export markets and our own price, and two, the changing nature of actual quantity flows in the world as we see China pull back from U.S. soybean exports. In this figure, I'm showing soybean cash prices of an index created by CPIA at one of the main export ports in Brazil, and the New Orleans export price. As you can see, with the onset of the tariffs, a spread developed between both price series, where some narrowing has occurred a few times when it looked like some kind of trade deal might come to effect. But last week we saw the spread get to its largest point yet, by my calculations, of about $1.90 a bushel. This is something to pay attention as we move forward. I think we're getting closer and closer to U.S. export prices relative to Brazil's being at a point where maybe China could import some of our soybeans, but at a much lower price and still encapsulate the tariff. Now, if we see another round of tariffs implemented by the administration, and if China for some reason up their tariff rate on soybeans, we could see this thing widen even more. I'm not sure that would happen. I'm sort of skeptical of China implementing an even higher tariff on soybeans based on what we've seen out of their economic numbers recently, particularly with pork prices going up and their CPI being a little bit higher than analysts expected. So as we move forward, this is something to pay attention to. Also, we've seen an expansion of exports into other countries, but it's mainly at this lower price, and I'll talk about that a little more as we move forward. In this graph, I'm showing monthly soybean exports for Brazil and the United States. You're seeing the 2017-18 marketing year, and the month of August for me is an estimate based on weekly export inspections and what we've seen from the Census Bureau and Brazilian exports. What we saw the last quarter of the marketing year is a jump in U.S. soybean exports as the low prices at export points has generated demand from a lot of countries that are not China. We've seen Chinese exports fall precipitously, and what we've seen is countries like the Netherlands or the EU come in and increase their export totals. Places like Egypt have done large imports of U.S. soybeans, Pakistan. There's just a variety of places that have showed up. Mexico has upped their soybean imports. So at these lower prices, we're seeing exports increase for this part of the marketing year. A note of caution is that this is normally the time of the year when we export the least to China. And the question for 18-19 is, as we move into the fall year, as you can see in this graph, when we see exports start to really get high from the U.S. in October, November, December, and January, when China comes in a strong way, will we see these other countries make up the difference? I'm highly skeptical of that being the case because China imports a lot of soybeans traditionally from the United States. So this is another thing to pay attention to. I thought it might be interesting to look at actual soybean exports for the month of July, basically the first full month of soybean exports under the new tariff scenario we currently have in place. And as you can see, I've taken the numbers and put them in a percent term by country, and Chinese numbers have shrunk dramatically. We've seen a real pickup to places like Egypt, Taiwan, and the EU in July of this marketing year, 2017-18. Having said that, the actual total of exports for July was much higher than the previous 4 marketing years that you see on the left-hand side of this graph. So as we move forward into September, October, and November, it'll be interesting to see how these kind of graphs break down, and if China continues to stay out of the U.S. export market, will we be able to see expansion in these other countries to a point where it doesn't hit exports too hard? It's going to be tough, and as we move through the fall and after harvest, I'll post some more of these graphs and we can discuss them. So overall, when we look at the 2017-18 marketing year, we've seen soybean exports probably eclipse the current USDA projection by about 15 million bushels. We'll find out in the September WAS report what their estimate is this Wednesday. As we look forward to 18-19, tracking that spread between Brazil and the United States will be important, and looking at where the trade flows go, and can these other nations make up the difference in what we normally send to China. If not, with the large U.S. crop we see on the horizon, expansion in production possibly in South America, and lower export demand, it's really a bearish tone for soybeans as we move into 2019. Well, I thank you for your time. As always, you can find my weekly outlook and daily analysis of issues related to Corn Belt farm economics at farm.daily.illinois.edu. I look forward to seeing you around the state of Illinois.